Good evening. Before we start the articles today, I have a small background because this background will connect the three different articles that we'll be studying today. So before we proceed further, let me explain what is this about. First one is about the capital formation in our country. Second one is about the modern financial architecture. Then we have this article about how the West is, seeing geopolitical realignment. And these three articles have one common thread. I mean, unless and until it is explicitly mentioned, one wouldn't notice the common trend lying beneath them. Okay? There are a couple of other articles that you can study for yourself. I'll just give you a background and leave it at that. Alright, let's begin. So let's go back to the 1970s. How is the world like at that point of time? To explain why the world was existing like that, I might have to go a little behind as well. Before 1940s and specifically speaking 1929. So this is the time period when a landmark event in the economic history of the world happened, the Great Depression. You're all aware how a state of hyperinflation occurred there. So this phase followed with the Second World War time. And then after that, the global geopolitical architecture has realigned and we created what we know as the bipolar world, headed by US and USSR. But somewhere in the 1970s, US economy was growing and they took a very important step. They started to print more and more money. They previously, when they wanted to print money, every dollar that was printed was pegged to the value of gold. You all know this, right? Basic economics. But from 1970s, that trend was taken away. It was backed by bonds. So US government started printing more and more money. What will happen when you print more money? Let's start with the government. Government wanted to spend that for infrastructure, social welfare, etc. Right? So they did spend that money. But since US is a capitalist economy, it also benefited a lot of companies, MNCs, or the capitalist world. Simply put, capitalists. And they recruited a lot of people. Jobs were created. It was all fine. But suddenly, in different time spans, many economic crashes happened. Let's say the economic crash somewhere around 2000. It's called the Y2K bubble, or the stock market crash of 2008. All of this created more trouble in the global financial architecture because what started out like a fair and square game, they did not anticipate it would spiral out of control. Today, as a result, even after the 2020 COVID crisis, today as a result, when the total money that was printed, or let's say the money that is having a backing of reserves, if it is 100 trillion, the world now together has 300 trillion debt. So no single government has the money. See, ultimately, someone should be in surplus and someone should be negative to repay the debt. If the global production itself is valued at 100 trillion and the debt is valued at 300 trillion, it's a clear cut, it's a no-brainer that we are never going to see a scenario where this debt will be repaid. This is the reality. We were talking about, see what is happening right now. When money is flowing in the system, in an ideal scenario, these jobs would be created. But imagine a scenario where you are left with this kind of a situation and there is no money flowing. See, this excess money will, however, be stored in banks. Banks will again lend. But if bank crashes, economy also crashes. That is exactly what happened in 2008. A big bank called the Lehman Brothers crashed, and that's how the crisis started amplifying. So, as a response to this, what can any government do? Figure out a way to repay the debt. What can the governments do to repay the debt? One, they can increase the tax. If taxes are increased, people won't be happy. Two, print more money. It will increase the inflation. Or three, any other? Yeah, when I say print more money, obviously you will be pushing more bonds. See, together the world cannot borrow. Someone should be having some surplus, right? There is no surplus here anymore. So bonds route don't work. So therefore the third route is hyper-nationalism. You don't have any money left. So the governments are under severe stress. Okay? Look at the trend. Did you see the recent backlash starting from Indonesia? Then Nepal. Then Bangladesh. Before that it was Sri Lanka. Recently you also saw how the US government has seen a shutdown, complete shutdown, because they were not able to pay salaries. Imagine the richest country in the world is not able to pay salaries to the government employees. The whole government restructuring of debt that the US government was promising as an election campaign, in the election campaign, how we will reduce the size of bureaucracy, everything. It's simply a very futile attempt to reduce the expenses. The so-called austerity measures of the government is nothing but to reduce the cost of the government exchequer. Is it helping? Not much. So this is the background. In a world where no single country has a solution to figure out the financial optimization plans, the only way out is delay the debt. There is a difference between income and wealth. Can you tell me what it is? What is wealth? What is the difference between income and wealth? Both are about money. Tell me. How many of you are CS here? Anyone else? What is the difference between commerce and finance? Doesn't explain anything. Imagine you are talking to someone without a context. What is the difference? So similar logic if we apply here, is wealth a larger component or income? You all know very intuitively that wealth is something larger than income. But what is the difference? Let's say if this is wealth and the rest is, I mean, this is income, the rest is wealth. What does the rest constitute? Simply put, I'll simplify it at a household level. All the money that we get in exchange of our time, it's always a capacity of time. Income is a capacity of time. Wealth need not be. Even if you are not dedicating your time, it can still generate income. So every country aspires to be wealthy. It doesn't want to stop at the income level. So within every economy, you have a class that works for wealth where they spend disproportionate amount of time. Any 9 to 5 mentality, like for example, if a person decides to have 9 to 5 as the working time, they only want to exchange a certain amount of time for money. That will generate income. And if they have a surplus, they save it. This is how an economy functions. But when it comes to wealth, it runs on leverage. There is an element of loans that you take. So you take a loan, that loan will generate more money and you reinvest and it will generate wealth. But when it comes to income, there is no leverage involved. The only thing that you are exchanging is time. So your income is a function of time and your wealth is a function of risk. I mean, I'm oversimplifying this, not just risk, there are many other factors, but in the context of our conversation. So, when you have significant number of people trying to be risky in a country, that distorts the existing model. So, let's say there is a pyramid like this. Let us take the time period of 1991 in India. You have the lower class, the middle class, and the upper class. So they have a very small, the number is very small back then. Okay. Now, if you take the present day scenario, the number of people is still small, but the the lower class is now further divided into many more segments. So there is a upward social mobility. Aspirations have increased. So the quality of job is no longer decided. I mean, incomes decided the quality of job back then. Now that has changed. The perception has changed. The quality of work is also important because let's say, for example, Gen Z. Why am I talking about all of this? I'll explain. Let us talk about the Gen Z. Your parents struggled and exchanged their time for incomes. They saved bit by bit and they gave you a life which is significantly different than what they lived. And it's human tendency that we aspire for something that we don't have or something that is better than what we have. So a country should provide for that aspiration, but should not stagnate at what it was 20, 30 years ago only. Because the very idea of development sees an evolution. So from an individual level, if this economic aspiration is not aligned with the country's aspiration, there is a distortion. And that country's aspiration is anyway linked to the global connections it has. Are you following me? So, income levels of an individual, of a nation and global level are intertwined. That linkage is decided by the financial institutions across the world. Today, those institutions are under stress. Why do you think gold and silver, if you are aware of the news, gold and silver are sitting at an all-time high. 10 grams of gold is near 1,20,000, 1,30,000. 2020 it was 55,000. Before that it was 27,000. In 2 years, from 2018 to 2020, post lockdown, it doubled. From 2020 to 2025, it again doubled. More than doubled. Why is this happening? Because the governments realize that it is no longer a safe asset. I mean, normal bonds, even American bonds are no longer safe assets, and central banks are hoarding gold because that is relatively safer for them. Why is all of this happening? Because we are in the middle of a bubble. The world is struggling to figure out where do we generate new wealth from. We don't have new avenues for wealth generation. And then on the opposite side of the spectrum, you have new challenges in the name of AI. Not only the existing jobs are under threat, the future is uncertain. As if there is a cherry on this cake, we have the problem of climate change. So, a lot of political scientists comment that the present wars that you see, which are fed by the defense industry, is just one way to distract from the main problem, that of global debt. Take the case of US. Student loans are at an all-time high. They were not able to, there was a time period in 1940, 1950 where a single income from a family could safeguard the entire family. Now, even after both husband and wife working together, they are not able to feed their family. Forget saving, forget generating wealth. They are not even able to sustain a family. We already spoke about how the wage growth is not proportionate to how, economy was rising. All of this just doesn't add up, right? See, on one hand, you are saying the wealth is generated, massive amount of wealth is generated, and yet we are not able to figure out how to address the needs of the common population. This is at the global level. Is the situation any different in India? Maybe, maybe not. But if you were to go by the latest news, there are roughly around 350 billionaires who control around 50% of India's GDP. One of the most eye-catchy headlines was that Shah Rukh Khan is the richest actor in the world, if I'm not wrong. He has a net worth of around 12,000 crores. This inequality is second concern. This is the broader context. To sum up, we don't have enough money, we can't figure out how to generate new jobs, and then we can't even increase the taxes because people are already suffering. It is through this impossible set of challenges that the world is navigating through. We have to figure out a new pathway. So today's articles should be viewed through this background. Okay? Chalo, let's begin. The first article is about why Indian capital needs to invest domestically. Let's go back to the GDP formula. Can you tell me what is the GDP formula? GDP formula: consumption plus investment plus government expenditure plus exports minus imports. Now, if India is seeing an economic shock, what can be the probable reason at this present point of time? First one is the tariffs, for example. So if tariffs are imposed, your X takes a hit. There is a concept called elasticity of demand. Just because you are having extra money, you wouldn't be buying more goods. There is a limit to how much you would want to spend. Let's say you want to eat one biryani, which will suffice. Just because you're having extra money, would you buy 2 biryanis for lunch? Or just because you have extra money, would you want to install a second TV in your house, in your bedroom? Would you want a TV in your kitchen? No, right? So there is a limit to how much you can spend. When it comes to government expenditure, yes, it can push to a certain extent, but beyond a certain threshold, even governments can't drive economic growth, because the main job of government is not to do business. It is to govern. It is to maintain the sanctity of the social contract. When everybody is doing their job efficiently, economy thrives. So this is where investment comes into the picture. Till now, what was happening? You have FDI. Let's say a large company wants to invest in an Indian economy and create good jobs. For example, you have the Google, Microsoft, Facebook, etc., etc. They started their campuses in India, which generated some amount of wealth. Take the case of Amazon. Not only is it starting its data centers, the customer care services, the warehouses, everything, a gamut of services that Amazon offers, it has its base in and around Hyderabad, Bangalore, which is generating good number of jobs. But is that enough? Maybe not. Why? Because FDI by nature is coming from external agents. I told you the background. The world is under debt. Let's say a company wants to raise more money. It still has to get that money from a bank. So banks are under a lot of stress. What do you mean by this banking stress? What is the traditional banking model? Let's say this is a bank. You gave 100 rupees to the bank. Bank will give a loan to some person or a group of people, this same 100 rupees, and generate 10% of interest. So this 100 rupees will go out, and when they pay back, bank will get 110. And out of this 110, the customer gets a part of it, let's say 4 or 5 rupees, because they are giving the money. So this is how a traditional banking structure works. Imagine a scenario where the banks are giving, but they're not getting it back because the businesses are failing. It's a problem, right? The same case, take it at a global level. When you only have reserves worth 100 trillion and you are supposed to get 300 trillion, nobody is paying back. Obviously, the banks are under stress. They can't maneuver beyond a point of time. They will have to pass on the debt to the next generation. But there is a lot of discomfort from some rich individuals who do not want to depend on these banks. Let's say, for example, why you don't want that. Let's say you are someone who is in Dubai. Okay? You want to send 10,000 rupees to your family in India. The normal traditional method was that you would depend on an intermediary. Previously used to depend on companies like Western Union. They will charge a fee, let's say 500 rupees or something, and then give the remaining to your family. Then came the banks. Then came the UPI like architecture. But still they would charge something. Some rich individuals, see, for 10,000 you don't mind paying 300 or 400. Imagine if you are transferring like 10,000 crores. Even a percentage of that will hurt the billionaires. They don't want to pay this third-party transaction costs. And that's where the advent of alternative parallel currencies came into the picture. Okay? We'll get back to that. But if India has to sustain, like at this point of time, we are not really worried about the rich people trying to distort the system or create a parallel architecture. Let's come back to the need of our country, that is India. How do we generate more wealth? By bringing in money from outside or leveraging whatever resources we have. These are the only two options we have. And it is very clear that we cannot depend on external agents. Why? Because the world is suffering from supply chain disruptions, some wars are there, so and so. Correct? So let's go back to the table and see what other options do we have. Indians are saving money. Let's say we all have families where a part of our parents or our guardians will be investing a certain amount of money in fixed deposits, right? Let's say every month, if a household earns 1 lakh, they'll spend like 50,000 or whatever is the amount, and the rest goes into 30,000. Let's say, for example, 30,000 goes into a recurring deposit or some chit fund or some gold investment or some saving instrument. Traditionally, those saving instruments are considered to be safe, and Indian middle class has been risk averse. Here is where we have a global opportunity. Not just from India, from across the world, we can attract these small investments if we can create an architecture. Why Indians do not want to invest in stock markets? Previously, not only was it risky, it was also difficult. After COVID, there is a 20x rise in the number of users adapting to this digital routes, digital brokers like Zerodha, to start investing in the stock markets. Why? Because there is a increased level of trust, and people are, like I told you, becoming more and more attracted to the risk. They're okay to take those risks. So when the risk appetite in an economy is rising, that is the perfect time for markets to tap into the domestic resources. And that leads to capital formation, and it also reduces the cost of borrowing. Let's say, for example, if we are depending on FDI, let's say a foreign company is coming to India and is saying that I will invest X number of crores or X amount of money in your company. In return, you give me the ownership. So we are having a strategic advantage if we avoid FDI. Why don't you democratize the participation? Let's say a company like Paytm really comes up with something innovative. We are still dependent on external companies like SoftBank to raise that money. Why can't we tap into our own resources? Am I talking about a very new novel idea? No. I'll give you an example that it was possible in India if the intent was right. I'll tell you one story, small story. Let's go back to the time when there is this person called Varghese Kurian. Are you aware of him? Who is this person? Are you aware of Satyajit Ray? Who is he? At that point of time, Satyajit Ray, is it Satyajit Ray or Shyam Benegal? I think it's Satyajit Ray only. Satyajit Ray and Varghese Kurian were collaborating to produce ad films for the promotion of Amul. And somehow they weren't reaching to the masses. And that's when Satyajit Ray decided that, he suggested Varghese Kurian that you should actually make a movie to tell the story to the world about the difficulties of these farmers and the plight that they go through and how they were able to overcome all of this. But the movie would cost somewhere around 7 to 10 lakhs at that time. And Amul is a cooperative. What does a cooperative mean? It's a collection of people coming together. And immediately Varghese Kurian said, okay, that's not a big amount. Each farmer would contribute 2 rupees. And they did. When that movie came out, not only did the movie became a commercial success and it spread the message of Amul, it also displayed the collective consciousness of this whole idea. That same ideology, I'm just deploying it here. If we can do that at a cooperative level, why not at a stock market level? If the intent is right, if the heart is at the right place, we can tap into our domestic resources, right? Why should we worry about the global debt? India as such doesn't have a debt. And therefore, to that extent, we are insulated. If the world is figuring out how to go through that problem, India shouldn't be affected. Therefore, it is the right time for India to create a architecture for capital formation within our own country, taking cues from the Gandhian ideology of cooperative, but slightly different, the modern version, because we are all driven by incentives. Let the market take care of itself, depend on the collective capabilities of the idea, and reinvent our stock markets so that people start contributing and participating more in companies that will build this nation. Am I making sense? So this is the time period where we focus on this I. Unlike in the past where we were dependent on FDI, let us depend on households. And the entire set of macroeconomic policies should align with this objective. What do I mean by that? Inflation targeting, equitable distribution of resources, proper direct benefit transfer, timely dispersal of funds. If all of this are taken care, people don't mind contributing a little amount for their own future. So the role of the state should be reimagined in this scenario. Let's say an organization like SEBI, which is the watchdog of the the stock markets, should play a more active role in informing the citizen about what company is. Of course, it will be a conflict of interest if SEBI directly gives an advisory, but it should create a more user-friendly metrics to decide what is a good company. I mean, the public is also lapping up. So these challenges can be overcome if there are some more steps that we can take. Apart from this financial literacy, etc., we also are talking about the quality of jobs, which is again dependent on the kind of R&D that India invests on. So here in this article, there is a comparison between India and other economies like China. So we want to take a cue from China as well and increase our R&D expenditure. Okay? And this article is very, very, very important because you have seen this capital formation as a theme in 2020, in 2016, and it is very likely it will repeat next year also. You might see a direct question on this topic next year, so please read this topic with utmost care. That's the reason I'm explaining with such detailed background. Okay? Now, at the same point, you will also see what are the other thrust areas that we have to focus on. Household savings is fine, R&D is fine, but one more thing that we are not focusing on as much as we would want is wage growth. Right now, companies aren't equitably paying the employees, or even if they are doing, it is not commensurate. If profit is increasing X, a part of that X should be proportionately increased as wage, is what economic theory suggests. But since we have an overabundance of supply, the wages have almost remained stagnant. So we need to figure out a policy for this wage growth also. And if you see any sectoral imbalance, let's say for example, if the government is spending or emphasizing so much on let's say AI or the digital revolution at the cost of other sectors, there should be a framework which immediately flags that this sector is getting ignored, so that there is no spillover. And that is the gist of this article. This article is one of the facet of the global level geopolitics and the trend that we have, the present level of debt, everything. The next article is also an extension of the same thing. Modernization of the financial architecture, how India is adopting the stable coins. Now, this is where it gets interesting. I was talking about the rich people. Rich people traditionally depended on banks and the loans that they give. All the rich capitalists in US do not take salaries. They'll just live on debt. And they recycle that debt from time to time because that's how they avoid taxes. Somehow, the tax policies are favoring the rich instead of the middle class or the lower class. Right? And these capitalists say that is the incentive we have for taking the risk and also creating employment. All that is fine. But with the present scenario where they are just feeling unsafe, they are rich, true, but it just takes a matter of few days to wipe off that entire wealth. There was this news somewhere around February or March. Nvidia is the world's highest valued company. Something happened and the stock fell down by 30%. DeepSeek event. And these are the kind of economic shocks that high net worth individuals have to live with. So their stakes are high, and therefore the environment that they live in is also equally risky. And this is majorly because their worth is linked to how much debt they owe to the banks. Because they're running on leverage. Every large company has a debt. Can you tell me any company that doesn't have a debt? Amazon turned profitable recently after so many years of existence. In India, it is still not profitable. I'm talking about the US entity. Why are they still running under losses? Can you tell me any single unicorn that has turned profitable yet in India? Not many. They're still burning cash. Because they just want the market share. Once they consolidate, they will increase the prices. Anyway, coming back. So this debt and banks, this is a different story. And the rich individuals, they don't want to depend on banks anymore. Here comes the story of Bitcoin or any virtual digital asset which serves as a medium of exchange between two people. And it is based on a technology called blockchain. What is a blockchain? Simply put, it is a technology where you don't need a third-party intervention. Let's say, for example, if you and I want to make a transaction, we will have to route the transaction through a bank. But if we were both on this blockchain network, we wouldn't be needing anyone. So that Dubai businessman who wants to send money from Dubai to India would no longer have to wait for the bank. This blockchain technology is 24/7 available. The cost of transaction is almost close to zero. There is no third-party surveillance. And therefore, if all the rich individuals start transacting in this digital assets, they are no longer exposed to the risks when a bank crashes. And that is the idea with which Bitcoin came into origin. But what is the problem with Bitcoin? You might start off, as the spiritual Kubera and end up as the Kubera Danush in Kubera. It's so volatile that on one day it would be valued at 19 lakhs, the other day it would be at 19,000. What if you bought it at 19 lakhs expecting it to turn 38 lakhs and it ends up becoming 19? It's so volatile and people wouldn't like volatility. Traders might like volatility because they'll sell and buy. The risk reward ratio, the arbitrage that they have, they'll make money there. But you cannot have stable economy on such volatile currencies. Why is this volatility happening? Because unlike in a fiat currency, for example, you have a rupee. This rupee is backed by a government backing. Bitcoin has nothing like that. If it goes for a toss, like if all the money goes down the drain, there is no one to question because it's an unregulated, self-regulating, blockchain-driven currency. And that's a very scary thing for many people. And it wouldn't sustain for a long time. All it takes is one, influencer to distort the entire system. So this gave rise to an idea called stable coins, which has the same qualities as that of a Bitcoin, but is backed by a digital currency like rupee. At this same point, I would also try to bring one concept of algorithmic coins, algo coins. It tried to solve the problem of Bitcoin volatility. What is this Bitcoin volatility about? See, it is like there is a cryptographic, messaging involved, or the technology is based on cryptography. If you can solve and mine the coins, you will generate more and more Bitcoins. But that required huge computing power, expensive. Blockchain requires a lot of electricity, expensive. And therefore, there was a lot of volatility. So algorithmic coins were another alternative where as the demand increases, the number of coins increase. As the demand reduces, the number of coins reduce. And it is all based on an algorithm. This was supposed to solve the problem of Bitcoins. But the problem is, what if the demand comes to zero? The algorithm literally evaporates existing currency also. This was the problem and it led to a crash. So there was this algorithm coin called Terra, which is backed by US dollar. But since the algorithm has seen that there is virtually no demand, that entire wealth got wiped out. This is the Terra crash of 2022. And now with Donald Trump coming back into the picture, he wants to peg this with the experience of all of this, he wants to promote the so-called stable coins, which are backed by currencies, actual currencies, so that the medium of exchange becomes simple. And again, it will not be through intermediation. It will not be through a bank or organization like Swift. It will again be on blockchain only. Let's say, for example, one stable coin is worth $2. One stable coin is worth $2. You will get the equivalent money. Let's say, for example, $1 is 90 rupees, for example, today. So one stable coin is 180 rupees. It will automatically calculate on a real-time basis without any intermediation. It will exchange. Now, if people start moving to this, if something happens to this system, if money laundering is happening, because one negative quality of blockchain is it's literally anonymous. We can't figure out who is doing the transaction. Money laundering and terror financing can be a big threat. So with this kind of threats, India should be able to adapt to this new evolving models of global architecture. See, every technology has multiple phases, just like the internet. Internet began with only a few individuals who thought this was just a fad. Eventually, today you see everyone thinks it is as necessary as electricity. Similarly, if India doesn't adapt itself for the evolving global architecture, it will fall behind. And therefore, we are seeing how the stable coins will be the next leg in the evolution of the financial architecture. We have had banks, then we have moved towards internet banking, then UPI. Next phase might be stable coins. Yeah, I'm talking about CBDC. The major problem of CBDC is interoperability, which stablecoins want to solve. For example, CBDC is a digital equivalent of rupee. The transaction was happening only between two people who are okay to have rupee based transaction. But what if the other person is having dollars and you want rupee? That's where stablecoins come into the picture. And also, this is the very nature of the word central bank digital currency. There is an intermediation involved, and stablecoins more or less want to avoid any kind of intermediation. That's the whole point. Yeah, that's what I'm saying. Okay, so we understood the second phase of the article, and now we'll move to the third phase. Till now, we are seeing a trend where the West is aligned I mean, the Europe, when I say the West, we're talking about US and its allies. So traditionally, along with US, Europe was also aligned, and literally put, it was dancing to the tunes of America. But the recent trend somehow shows that it is no longer the case. Why? I've told you the context. Every single country is suffering. US is also going the hyper nationalistic route. Even within Europe, you are seeing the rise of right wing governments. So we are witnessing a trend where every nation is realigning their priorities to see what works for their nations. India is no longer an exception here also. You see a shift in our policy, in international policy. What do we say? We are now, we are moving away from non-alignment to strategic autonomy with multiple alignment, multiple collaborative alignments. Why is this the case? Because we are looking at our self-interest. That's the trend across the world. So, what is this article saying? Simply put, West is now no longer a homogeneous entity. You have multiple layers within the West. And this multiple layers, unlike in the past, are having so many confusing directions. Same country might align with you on one issue and oppose you in another. Therefore, diplomacy is seeing a new phase of challenges when it comes to alignment with different countries in the world. It might be chaotic for India, but we also see an opportunity because hitherto unexplored avenues can now open up. We can open up opportunities for trade diversification, people to people exchange. There are new avenues where Indians are now traveling. For example, Estonia, Romania. These are never the countries that you would listen in your family background. Like, did you anytime see people visiting Estonia, Romania for work? You must have, but very unlikely. You hear US, UK, Australia, Germany, but never Estonia, Romania, and definitely not Nigeria. But those avenues are happening. I mean, How is it possible? Because we see economic opportunities there. We are jumping to take those economic opportunities. And rightly so. That's how the world should navigate going forward. And so does India. That's exactly the essence of this article. So you see how everything is linked to money. And that's the common thread that I want you to have. Okay? So this sums up this article, and I would like to quote one Sanskrit line, Dhanam Moolam Idam Jagat. So everything is linked to money. So tie it down to that aspect and you will see the common threads everywhere. That's it for the day. There are a couple of articles that you can pick up. India-UK ties, again, nothing new, an extension of whatever I discussed. Whatever works for whatever works for UK and India, we are aligning there. For example, see, education, defense cooperation, economic cooperation, it's just simply put, whatever works for both of us, we are aligning. Whatever is not working, we will not align. That's it for the day. So there was one more news about how quantum physicists won a Nobel Prize. Yesterday there was about Nobel Prize in biology. I will club all of those articles and discuss them at once. Okay? Sure.